No, I did call a mutual friend of ours last night to ask if there was anything funny that I could, sort of spring on you today.
Yeah,
Because, we really don't know each other that well. And
not
so,
at all. No.
we've just for transparency and clarity to the audience, Chris and I were introduced through a current employee of mine, former coworker of his, who remained nameless. But we've been talking about his business and my business and the intersection of our businesses and the insurance industry in general and mutual clients and prospective
Wow.
clients. And thought it was time that we got you on here and made it official. But
And I publicly begged to be on the show, so I'm glad
you
that
kind
worked
of
out.
did. You have no idea what that did for my ego.
I'm sure it helped. Yeah.
So anyway, I'm glad you're here.
Thanks for having me.
Happy to be able to talk to you and pick your brain about post-Prussian warfare.
Mm-hmm. My
And
subject of expertise.
1910 to 1950s Middle Eastern geopolitics. Is that what we're talking about?
I mean, I don't know who doesn't love to talk about that subject, Thomas. So,
Yeah. Well, the
you
cool
know
thing
what I've
about it,
never known? Do you prefer Thomas or Tom? Just so I don't put my foot in my mouth.
uh, Thomas, but I do want
Okay.
you to put your foot in your mouth. That
Mr. Brown, would you prefer Mr.
this is
Brown?
not just an audio podcast; it's a video podcast. So, but I've got a thing to put in.
That's weird. That's a
This
little
is
weird. And it
it,
matches your background, which is even weirder.
well, it's intentional.
Okay. I,
It's
I
it's
don't get
it's
it. But
it's I will explain.
this is a great podcast, man. I can see why people watch.
It's because you want to talk about geopolitics. That's why you don't get a fish as a co-host, right? And look, I'm from Louisiana, dude. Okay, but this is
Everything's fish related.
Boudreaux.
Okay.
You haven't seen the intro to the podcast, have you?
I
It'll
guess
explain.
not, man.
Yeah.
Yeah.
Okay.
I do
Well,
know there's a fish in the logo.
yeah. So the logo fish are Boudreaux Thibodeau. They're my co-hosts.
Uh-huh.
And yes, I will definitely. We're wireframing the website where the full intro is going to be, and we do quite a skit with Boudreaux and Thibodeau. They actually speak.
Okay.
Yeah,
What is like
so
a Cajun accent? Do they have like a Creole thing going on?
100%,
Okay.
a hundred
Naturally.
percent. Yeah, it's amazing what you can get on the internet. So I'll tell you real quick how we did that. So I was like, it'd be cool if because I fish. So the name of the podcast is Claims Casting, right? So
I saw that. Yeah.
double entendre, broadcasting, claims. Yeah, thank
Well
you.
done. Yeah.
It's about, and I may go into this a little bit because it's kind of funny. So I have my editor producer here with me today, Matt, and he's a really good videographer. So he said, why don't we go out to your fishing camp and shoot the whole intro out there? So we spent a day out at the camp and got a bunch of footage, and it ended up with a 2.5 minute intro that I
Very
personally think is
cool.
hysterical. I think they're going to people that are going to look at it and they're going to go like WTF and shut it off and never come back. And like, I'm fine with that because I want the people that really enjoy it to see it, and that's who I want to talk to and have listen. But anyway,
I guess I missed that part. But that's one of the cool, not to kiss ass a little much. Am I allowed to, I hope I'm allowed to say that. It's just a video cast, right?
you can say anything you want. I remember this is not recorded.
But I love like I hope to be at a place in my career life where like I can truly say whatever the heck I want to on LinkedIn and have no real repercussions about it. So I appreciate you. Like, I don't care. That's a funny intro. I'm gonna throw that on there. Like you're not worried
Dude,
about what
I'm like I'm
the
almost 60 years old and I'm who I am. Like even my business coach saw this. He saw the intro that I'm talking about. He goes, "Dude, you're one of a kind." I go, "Bruh, I got to be me."
right. But
Right.
there's still like I'll go to hit the send button. I'm like, I don't know.
So, so,
I can't say that yet. I need like 10 more years.
so there's a little bit of that in here because you and I, like I said, we really don't know each other that well. So in the setup for this today, you said, and I'm going to read this whole thing. It
Uh-oh.
says, also, I can engage in most any topic, I think, but my non-insurance background is music, rowing, which we're going to
Uh-huh.
talk about rowing,
Okay.
because I'm a rower too.
Get
Uh,
out of here.
yeah,
That's the rest of the podcast. That's all we're talking
yeah,
about
no,
now.
seriously. And rowing in our grandmothers.
Uh-huh.
Yeah, so I know a little bit about your grandmother.
Oh, that's right.
You
My
probably don't know
post.
that
Yeah.
I do, but yeah, I do. So I do want to ask about that.
Now I gotta know. Tell me your rowing story, man.
Well, so yeah, I
We're
was the
about to
row.
lose your entire audience here, by the way, except for like the two people that row. That's about it.
That's only two people on, and it probably gives a good chance that they do row. It's actually P row. You know what a P row is?
I don't think I do know what a P row is.
Yeah, well,
What's a
it's a
P row?
little bit of a slangy Cajun way to say P rogue, or some
Okay.
people might say P rog, but it's really we say P rogue, and it's a flat bottom canoe
Okay.
that originated in the swamps of South Louisiana that the swampers used to fell the cypress trees. And you would
Ah.
have two full size men on each end of a pirogue with a two-man saw, which we call a passe-bateau, and they would saw the cypress trees down and clear cut the woods. And there was
Huh.
that's the town from which I came, Patterson, Louisiana. It was the site.
Do you speak Creole?
No,
Oh, okay.
no, but getting
You can
back to
read French words and
Boudreaux Thibodeau do.
got it.
So we will uh, invoke them in the story later, and they actually do come in. And when we do a little bit of editing, you'll see the fish talking, and they speak in Cajun French, and it'll have
I
subtitles. And
must have,
then
yeah. I guess I was just listening into your
it's
conversation
funny.
with,
Yeah, it's
so I
funny.
didn't pick up on that.
We've been on 10 minutes, and I think the first rule of podcasting is like you're supposed to introduce your guest. So
Yeah.
maybe we should do that.
Okay.
Why don't you go ahead and introduce yourself, Chris?
How far back you want me to go? Like just what I do
It's
now, who I
like
am?
your first name, maybe, and your phone number.
Okay.
Uh,
Social
we,
Security. Um, so Chris Longano, I'm the current Chief Revenue Officer at Surety. We're a small startup company in the property insurance space. But I've had about 15 years career in insurance thus far. Spent a lot of it at Verisk. Worked at a couple of software companies. Even did a little bit of time at a tiny place called CoreLogic, if you've heard of them. Before that, I was a music guy, so I have a master's degree in music education. Thought about being a teacher, did a couple student observations, said there's no way in heck I'm going to be a middle school band teacher. So I thought I'd repair pianos, and I taught myself how to tune pianos, and I was working sweeping floors, very old school. I swept
you can
floors
tune
to
a
learn how to
piano, but you
repair.
can't tune a fish.
My father loves that joke. So I would sweep floors to learn how to repair pianos, and that was in 2008 during the financial crisis at that time. Didn't have a lot of work, and I just met who is now my wife. We just started dating. She was an actuarial associate at ISO, and I thought, well, shoot, I need a better career, and I used to be good at math, so I thought I'd become an actuary. And
So
then
now you're
found my way into
a
sales,
couple of
and
insurance
yeah,
nerds.
there you go.
So what'd you do at Verisk? Was that the ISO days?
I started in customer support, so I took a pay hit and just answered phones. During that time, that was 2010. Most of the calls we got were claim search, password resets. So spent about half my time just resetting passwords. The other half of my time were people calling in asking where to find a rule in the commercial lines manual
The good thing you
or
did
how to
that
find a
before
form.
AI came out.
I know. Or, I mean, even in 2010, there should have been a self-service password reset, but
Something. Yeah.
ISO just couldn't get that together. So it was us there. We were still selling paper manuals. So I'd get people call in asking for paper manuals, and I'd have to put in the order. This is
Did,
2010. Like, who's getting a
did you
paper manual mailed
did you
to them?
send it to them over the fax?
Pretty much, yeah. We had to go into our green screens and enter in the code. I built a whole
Crazy.
spreadsheet to translate the code into the manual so that everyone in customer support knew how to look up, like, if you have to order Delaware's homeowner's manual, what is the code you put into the green screen? No one thought to do this before.
It's
It's just
funny.
all by
You don't
memory.
look that old.
I'll be 40 in September.
Well,
There you
you're
go.
really not that old. You're a pretty young guy. It's amazing that someone of your age was working on green screens.
Yeah, well, welcome to ISO and the late aughts.
I'm not going to let you drag me into talking about that company. We
Um,
we have a very storied past.
I'm sure. So from there, I started taking CPCU exams, sort of dove headfirst into insurance because I had a kid on the way by this point. So I had to make sure I had a career ahead of me. Um, I got a job at Line Division. So Line Division, we filed forms and rate rules. So I did a couple filings. The enhanced win rating of 2012 has got my name all over it. So if anyone's writing vacant properties in Washington, D.C., that's my rule.
Really? That's cool.
I guess. I mean, there was
I
so
mean, if
much.
you're an insurance guy, I mean, that is kind of cool.
There's circulars out there with my name on it somewhere.
I got a book in from Amazon yesterday that has a whole chapter about
Oh, no kidding.
not me. Well, I'm in it. I'm part of it, but it's about my family, and it's actually a couple of sisters that we met while traveling in Europe, and we ended up hooking up on a tour and finding a couple of bottles of wine and having some really funny conversations, and they decided to put it in their book. So we finally got it in the mail yesterday. My wife was trying to read it to me on the way to work this morning. I was like, I don't have time, but I want to hear it when I get home. It's one way to get published.
Sounds a lot more exciting than a couple enhanced win rating circulars.
Yes, it does. It does. Sorry.
So, all right, here's a fun, I can't believe it was 2011 insurance story. So when we filed that win rating, the state of Pennsylvania said, we don't believe in general linear models when it comes to rating, right? So they didn't turn it down, but they said, no, you got to explain what this model does or we won't accept it. So the actuary was like, well, it's just like the fire suppression rating schedule we filed back in 1977. And I swear to you, Pennsylvania says, we don't know what that is. You got to find it for us. So I literally had to go down to the microfiche room and scroll through microfiches of...
It's microfiche, not microfiche.
Through tons of circulars from the 70s and found the original fire suppression rating schedule with handwritten actuarial tables. I couldn't believe my eyes. Like some poor sap who got their first like actuarial job at ISO in 1977 had to just sit there with a ruler writing out actuarial tables. Sent that to the state of Pennsylvania, and then they were like, "Oh, okay, sure, you can do this now." That was pretty remarkable. I was like, I can't believe I'm looking up microfiche. Sorry. So anyway, Line Division was a pretty boring job.
No, it is microfiche. Microfiche, that's a minnow.
I was giving you an opportunity to.
You want to see my fish again?
Yeah, exactly.
Dun, dun. You didn't catch that joke, did you? A microfiche
is a minnow. I get it. Yeah. It just wasn't that funny.
Okay, I thought I'd try it again because I thought it was funny, but yeah, I guess not.
So I'll fast forward a little bit because we're still in the early 10s here. So after Line Division, somebody tapped me on the shoulder and said, "Hey, do you want to be in sales?" I said, "Absolutely not. It sounds awful." He said, "Well, this is a sales consultant role. So it's basically like customer support, but you get paid a lot more." I thought, okay, well, some of that sounds exciting. So I took a sales consultant gig. I had 5 account reps that I supported and 600 accounts. I don't think I've ever had a job where I learned more in a shorter period of time. It was a beautiful marriage of like all the stuff I learned from customer support into like having real salespeople just allow me to sit on calls and allow me to ask them like, "Hey, why did you say that? Why didn't you ask this question? What did you think of this person's response?" If I can shout out people like Andrew Mackey and Kelly Bethea, were just huge, really early mentors of mine in that regard, which was helpful because about 6 months into that gig, Verisk decided we no longer want sales consultants. So they got rid of that position, but the VP of sales said, "Hey, there's this specialist role opening up. I think you should take it." So that was my start in the longest job I had at Verisk, which was for ISO Rating Service, also known as ERC. Sales specialist, at the time, the product was called ISO Rating Service, also known as Electronic Rating Content, not the sexiest name for a product.
2012?
2012, and I had finally taken and passed an actuarial exam right at the time that I took this job, and I thought, well, I don't need to be an actuary anymore, since I had this gig. So I did pass an actuarial exam, which I'm pretty proud of. Those are hard. Have you ever taken one of those, Thomas?
Uh, I haven't taken one. I will tell you that before I got into claims, I had no idea what I wanted to do, and I took the exam to be a well, what are the people that work in the towers at the airports? A flight controller.
Really? You and
Yeah.
my wife would be akin then. That's like her dream job. I keep
Well, I
trying to
didn't
tell
get
her.
it. They wouldn't tell me what my grade was, but only that I didn't pass. Well, I guess I didn't.
Interesting,
I
man.
didn't qualify, so maybe I passed. I don't know.
Isn't that like one of like the highest stress jobs out there, air
It's
traffic
funny.
control?
It is. I actually at my fishing camp, which I talked about a little while ago, my next door neighbors are both retired air traffic controllers, and I believe you have to retire at around 50, if not 55, and maybe it might be 59, but I don't think so. I think it's younger than that.
Huh.
And they both retired, and they both said extremely high stress,
Yeah.
but really really good pay and really really good benefits. And so now they have uh, a house in Vero Beach and a house over here, and all they do is travel back and forth and fish and catch
Hmm.
lobster. So their hard work paid off, and
It
so.
doesn't, yeah.
But anyway, no, I have not taken an actuarial test.
Okay. I don't recommend it.
Yeah, I wasn't
But
planning on it, in case you're wondering.
but that's where my career diverged. So the specialist thing, ERC is a unique product in that it was
What
at the
does that
time I
stand
was
for?
electronic rating content, of
Okay,
course,
okay.
possibly the sexiest name of any product I've ever sold.
It was pretty
Um,
sexy.
very self-explanatory.
Hmm.
So basically, it was the XML version of our commercial lines manual. So if you were in insurance, right, and you wanted to use an ISO commercial lines product, which 85% of the market does, you had to take the PDFs and write them into whatever code you're using for your policy admin system, right, or your rating engine. So electronic rating content was the translation of the manual into something software could more readily understand. At least that was how I sold it.
You mean, and that's when it was put into XML?
Yeah. So we actually the thing was built by we would write it in a rating engine. We had software we used, not me, our team, that would
Mm,
write all the commercial lines rating plans in software. And then we would extract the code from that software, which was C sharp, I think,
mm,
and translate it into XML schema. So I would go and literally demo XML data to IT professionals in insurance, which if that sounds exciting, I can tell you it gets pretty dry pretty quick.
it doesn't sound too exciting. But I actually remember those days, and probably my introduction to XML was via Verisk, but it was on the exact analysis side.
There you go.
So we've been an integration partner of Exact Analysis slash Verisk for many, many years. I don't know if it quite went back that far, not as an official partner. We didn't have our logo on the website then, but we did begin exchanging XML files. And that was way better than the PDFs that we got where we did OCR on them.
Oh yeah.
So yeah, that was a pretty transformational period.
Were you working with them when they were still Xactmate or
Yeah.
Xactware?
Mhm.
Very cool.
Yeah. So
Did you know the Lovelands and everything? I mean, how far back
I
do you go?
well, no, I knew of them.
Okay.
I never met him personally, but the guy that I worked for at the time, Mike Worley, had. And in fact, in the first episode with Tim Maloney, we went over a lot of these really ancient things that we did. And a real quick story about that. My introduction to Xactware was Worley was one of the 5 IA firms that were selected when State Farm decided to transition away from having, W-2 employees handle all their claims and
Okay.
contract out. I believe they went 50% of their claim force was IA. I mean, that was probably late 80s, somewhere around there. And, soon thereafter, we got a large flood event in Slidell. And it's like I was a casualty adjuster for 95% of my career.
Okay.
Yeah, so it didn't. I had a little bit of experience in property, but almost nothing. But I had passed all the state form certification, so we needed it was an all hands on deck thing.
So you're not a program. So how did you? Well, now I'm deadly curious. Like, how did you start eClaim then? Did you just have a buddy that could write some code, or did you have some money?
Listen to the first episode.
Oh, all right.
I can tell you again, but the people that have already heard it, no, it's all in there. It's a pretty good story, but just the first introduction to it was when that flood occurred in Slidell, which was 45 minutes from where our office was. Like everybody in the company all of a sudden became a property adjuster. So Mike Worley walked me down the parking lot and he handed me a cassette tape. And I said, "What is this? Like, you're giving me some music to listen to while I go across the causeway." And he's like, "No, this is Xactimate." And I said, "Well, what is that?" And he said, "Well, it's a program you're going to use to write estimates when you go and handle these property claims." And I'm like, "Okay." So anyway, that story it is explained in detail in episode 1, and it's pretty funny, And there's a couple of takeaways from that. Is that I passed all 5 of the certifications, but I got on site for that first lawsuit. I had no clue what I was doing, and I'm just admitting to it, but there's still a lot of that today, which is a point I want to circle back to later on in the interview, but. Yeah, so I did have dealings with Xactimate way back when.
Okay, very cool.
Yeah.
Well, anyway, I can fast forward through. I don't need to go through every CV, but I did that for a big chunk of time, about 5 years. And during that time, I was always bugging sales leadership to give me more things to do and was trying to be as helpful as I could be. I created a bunch of spreadsheets to analyze our sales success there. And a lot of people didn't even know what our win-loss rates were within a given year, or when sales originated. I always found it weird that we created sales goals based on the revenue we wanted to make. And no one ever looked at the actual pipeline and said, is it possible to make it with the pipeline? And what does the pipeline tell us in January? How much can we actually know?
I'm always blown away by that. You set goals that have no basis in reality, and you don't even you don't even detail the steps that are required to potentially reach those goals. It's just okay, you got to go out and sell X.
Yeah.
And you got to go out
20%
and
more this year.
Okay, well, how are we doing that? Let's work backwards, figure out all the steps and all the things that we have to do, and then that becomes our goal. That's what we can possibly do. And you do those things every single day. So it's kind of weird.
We learned, I was like, guys, by January, the way the pipeline looks in January, only 1 out of every 4 of those deals will actually close. So we only know 25% of our overall sales in January. It wasn't until March or April that you had a much better sense for what might close by December. So anyway, I created a salesperson batting average too, which never got used or adopted because it was well, are these good numbers or bad numbers? I don't know. They're just numbers.
Is it because they didn't play baseball?
Probably because we didn't play baseball, and it didn't really affect the way they sold. Yeah. But anyway, after that, I helped launch a product called Mozart. I didn't build it. I was just the original sales specialist for it.
That was still with Verisk?
Still with Verisk, their Mozart form composer.
Mozart, got it. What did that do?
I wanted to call it Ludosławski, but they said that didn't really have the same pop or zest.
It could have been ludicrous. It's going to be like this all day.
I didn't name it. Let's put it that way.
I hate to tell you.
But anyway, that was and then I ended as a personal property account rep there, so selling 360 value and PPC codes and stuff like that. When a software company that I knew called Clarion Door asked me if I would come and sell their rate quote buying system. So after almost 8 years at Verisk, I thought it's time to leave the nest and see what I can do in the outside world. So that led me there. And then I went to Carpe Data for a couple of years, went over to CoreLogic for a brief spell before landing at Socotra, where I met Jillian.
Jillian Cheney.
There you go. So I was I hit the fast forward button there because we.
No, that's good. So tell me, Surety is where your home is found now.
Mm-hmm.
Let's talk about Surety. So how long have you been there? And did you're the founder?
I am not the founder. So a gentleman named Watley is the founder of Surety. He's much like yourself, a bit of a serial entrepreneur. So he has several companies that he started. He was a general contractor originally. He built a reconstruction company, sold it many years ago, and since then he's been trying to build either services or software that help aid in the reconstruction world. So he has a pack out company, a storage company. He built Actionable Insights, which is a nonprofit company. So if you know Xactimate, Actionable Insights it's kind of like a Grammarly for Xactimate. So as you start typing in an estimate, it'll like, hey, you missed a coat of paint here, or don't you need 3/4 plywood?
That's very cool.
It's pretty cool.
Yeah.
And services mostly the contractors, and now even Verisk is starting to use some of their rule sets.
So that you're telling me that the inventor of the Surety product is the same guy that invented Actionable Insights and sold it to
Correct.
Verisk? Or licensed?
It's not sold to Verisk.
Yeah.
It's just, they use some of the rule set now.
Cool.
You can, in Xactimate, you can access the Actionable Insights, what's it called? Drawer or whatever. I don't know all the lingo to Xactware.
Where's he from? I mean, where was his business?
He's out of Carlsbad, California, out of San Diego area.
Got it.
Is that what you meant? I don't know what you meant.
Yeah, well, so many of the reconstruction guys are out of the Florida area. And
Okay.
I know I'm actually meeting with one. He's in a coaching class that I'm in. We're having a retreat in Austin, I think next week or something. So I'll be talking to him. He probably knows the guy, but he's in Florida. Yeah.
Wally's pretty well known on the reconstruction side of the world. And Actionable is doing really wonderful things. And again, nonprofit. So they're trying to be non-biased and service the contractor side of the world to a great extent. Created a product called Mpartial, which with a Matterport scan or DocuSketch scan will create a 99% accurate estimate just based on the scan. So it's a bit of an AI tool. But there's always a human component to that. Anyone that says they can do 100% AI is probably not being honest with themselves or with their customers just yet.
So let me ask about that. What's the name of that product?
Mpartial.
Mpartial. And that's not part of Surety.
It is not part of Surety. Just another company he founded. His guy Joao runs it now.
And they license to Matterport. And
contractors can purchase it to, do estimates within 24 hours, right? They can just walk around with a scan and then get the estimate back.
So I actually want to dive into this because there's some connecting things that we should talk about if you can. So I have heard of that, and I was aware that there was a product that would convert a Matterport video, I guess you call it, that the output of a Matterport would be a scan. Thank you. Into an estimate, and I'm assuming that's exclusive to Xactimate, or does it work with other? It works with other.
You can translate Symbility or Xactimate.
Okay. Yeah. Oh, okay, cool. And so, does it work with any other scanning devices other than Matterport?
I think officially DocuSketch is on their website. I don't sell Mpartial, so there is some stuff I just am not up to date on. But I think DocuSketch is another affirmed partner there.
Okay, cool. Well, I'm gonna take it offline and get an introduction because I have a friend of mine, and actually he's going to be a guest on here probably next week, and he's got a really, really cool scanning device.
Okay.
I don't know if he wants me to talk about it, but you'll see about it soon enough. It's super freaking cool. Yeah.
I don't know enough about their technology but I think as long as
you know the people that would, right?
Yeah.
You can make an introduction. Yeah, that's awesome.
Touch with Watley. So anyway, through all this process, one of the big things that kept coming up when he would talk to other contractors is their cash flow issues. And they would often complain about, hey, we get these jobs from insurance carriers, but the money ends up in the hands of a bank because the lender's on these checks, and we end up waiting 2 to 3 months before we see any funds. And this may be a surprise to you and your listeners, but if people aren't getting paid quickly, they tend to not work too quickly either. So not only was it a cash flow issue for contractors who, if they did want to do the job, often have to take out a line of credit, or there are some contractors that would buy materials on like a corporate credit card. So they're paying 20% interest.
Yeah.
Some situation just because Wells Fargo is holding on to a check and doesn't want to release any funds, right? So he thought, I got to solve this darn problem. The first thing he did was just research why lenders were even on payments. Like, was it a law? Is there statutes? They found nothing. The only thing that comes up from any legal standpoint is the homeowner or business owner, whoever owns the property owner, I should say, has an obligation to their lender to notify them if there's been any damages. The insurance company has a onus to make sure that lost payees are identified on the policy, but there's nothing specific in the policy language that says they have to be on the check. It's just the way in which the insurance companies have protected against double indemnity. If they put the banks on the check,
you're saying that there's nothing in the mortgage loan documentation that specifically refers to this either.
Not to my knowledge, not that it has to be on the payment. Just the homeowner or property owner is supposed to notify the bank when there's a loss. But totally I'm sure different. You own like 20 houses. Have you ever read one of your mortgage agreements? Probably not, right? You sit through and a lawyer says, "Hey, sign this, sign this, sign this, sign this." Next thing you know,
no. And that's a whole nother conversation, but it cracks me up when defense lawyers for insurance companies say you read the full policy, and I'm like, well, right. Did you read the ULIT to get on my website? And they're like, what's that?
And you could probably relate. I assume you were in Louisiana during Katrina.
Oh, 100%. Yeah. Oh, that's why I was wanting to talk to you, because I was like, I live this.
Yeah, well, I'd love to hear your story, but that's when it really got bad.
Yeah,
is after Katrina, because all these carriers started writing 100K checks or greater.
Yeah,
and that was more. Most of us don't see six figures on a payment in our whole life, right? So a lot of homeowners just fled Louisiana, and left their house in rubble.
Yeah. No, I mean, my house wasn't that bad. I don't remember what the amount of the claim was. I mean, if I had to guess, it was, it was less than 50, more than 20. So, it was significant, but the only, that the house was inhabitable after the parish, what your equivalent of a county, opened it back up, and we were able to come back. But I did have a FEMA trailer, because the house flooded from the chimney that got torn off by a tornado. So I mean, I did live that. You could barely get a contractor. You had to be able to eyeball all the fraudulent contractors that came in there, because every one of them wanted you to give them a $5,000 check just to put them on retainer, which of course I never did.
Yeah.
But then setting aside the efficacy of the claim process, which was non-existent, terrible, to when you finally get the check, to realize, hey, I have to go get my bank to sign off on this. So, and then half the banks around here were closed. So you had to find a way to get to a bank that you could send it into, and they had to mail it off, and it had to be signed off on at headquarters. And I don't think that they had to do installment payments with me, but I do want you to talk about that. And I felt that pain. And certainly, when you were first introduced to me and I understood what your company did, I was like, yeah, that guy's got a solution that everybody needs to hear about.
We'll get to that about, but my cynic always comes out when I hear it. But it's true, right? So it's a pretty big issue. And I don't know which bank you had, but it's a mix. It's a throw of the darts to see which bank you get. And even if you have a large bank, which branch of that bank you're going to get and what their procedures and policies are. If they're kind enough, they endorse that payment, and then they send you another paper check that you have to endorse and bring to your bank.
I'm pretty sure it was Wells Fargo for my mortgage. Yeah.
One of the worst culprits from what we've seen as far as how they manage it. Well, because here's the thing, the banks don't really, there's no customer service portion of this. They have no interest in making sure you're a happy customer. They just really want to make sure nobody runs away with funds. That's really the only bank's interest. And it's an uninvestable asset.
Even the insurance companies weren't prepared for a catastrophic event like Katrina. Certainly the banks weren't.
No.
So how do they ramp up in this situation? They don't.
Well, they don't, and it's an uninvestable asset. So when they get those funds, they put it in an escrow account, but they can't throw off interest because of federal, like, I guess, Better Business Bureau type laws, right? Of you can't profit off of the withholding of funds, right? So it's just an operational cost sink for banks. If you look online for like jobs for lost draft departments, I mean, it's like $15 an hour, right? It's your pretty entry level positions. So anyway, this is all to say that when Surety started, it was really a way to try and help contractors get their money faster. So what Watley designed was you could take a picture of the check. It created a digital asset, an X9 file. The policyholder could sign off on it. And then we basically had a small call service team that would call the banks and like just hound them for the money. We have a manual of over 200 banks on what to put together for each bank, depending on which branch it is. So we would get all the paperwork ready for the policyholder, send it to the bank within a few days, and then call them constantly, sometimes waiting on hold for 2 to 3 hours, just to find out that the bank lost the documentation or never received it, or you sent it to the wrong address, or we can't endorse this payment. It's got the wrong person's name on it. There was one horror story where it was a Steve Christensen instead of Steven. The bank refused to sign it, sent it back to the AIG address. I'm going to call out AIG here. We called up AIG and they said, well, this check's been cashed. You need to call the FBI.
Oh my God.
So long story short, they did more digging. They found out that AIG cashed their own check. So whatever address the bank sent it to, AIG just put it through accounts receivable. This whole thing took 4.5 months just to figure out that AIG cashed their own check, just because it was Steve and not Steven on the payment. So they had to reissue it again.
That is
to
crazy.
get this guy. And it was only like $136,000 claim. I mean, this wasn't like $1 million. So that was all in an effort, right? So we build a lot of trust within the contractor world that like, hey, we're working on your benefit. But the idea was always to transition over to getting carriers, right? The source of the payment, to use the platform to pay contractors directly. There was a lot of like, we had to get that information gathering, right? We had to kind of know firsthand how bad it can be. So I came on board around 1.5 years ago, a little under that, with the intention and effort to get carrier adoption. So if carrier
let me backtrack a little bit. You said to find out to get the real data on how hard it is, right? You mean from the consumer perspective, the claimant, the insured, or from the carrier perspective?
Yeah, I think there was an initial thought of like, just from a contractor perspective, can we automate this to some extent and make it smoother and just get them their money faster by working with the banks? But what you learn pretty quickly, and there's a few other folks out there trying to do it, is the only two ways. You can't automate it because there's 5,000 banks in America. They all have their own process and procedure, and even when they are supposed to follow it, sometimes they don't, and they lose documents. It's impossible. Once you put that money in the hands of a third party that nobody can control, you lose any semblance of autonomy there, right? The other portion of it that you can do is what's called factoring. So if you want, you can get a bank to back you, and you can advance the funds to the contractor. There's a few other firms doing that. So you say, hey, instead of you waiting on the bank to give you $100K, we'll give you $100K at a 5 or 7% interest rate, something like that.
Just any bank. Doesn't have to be the mortgage bank.
You have to have a financial institution back you if you want to perform factoring, right? Just because you need those funds at your ready.
What I'm saying is, if you're Mr. Homeowner, if your mortgage is with Wells Fargo, you're not have to do the factoring with Wells Fargo. You could go to any other bank and do. Yeah,
no,
gotcha.
In fact, you would do it like Captain is a good example. There's a company called Captain that does factoring. I don't know who they're backed by, but you just need a financial institution that says, we'll give you money at a 2% interest and you go charge 4%. So now contractors have a way to access funds, but it's at a pretty high percentage rate. So that's the only way to do it if you're not going to get the bank out. So just came to the realization the only way to really solve this issue is to remove the bank completely and effectively go at risk for the carrier. So if a carrier is using Surety, when they go to make a digital payment, their policyholder endorses just like they would a DocuSign, right? They sort of digitally sign it. We become the last party to endorse that payment, and then we move it into a custodial account. And we do similar to a lost draft. We work with whoever the contractor is, and we tranche payments out to them as they progress work.
So at that point, you take the risk off of the carrier and you say there's not going to be any double indemnity. we're going to ensure that the money gets to the proper party, and if it doesn't, we hold the risk.
Correct. We hold
So
them
it's-
harmless for any actions.
Yeah. And so, would you contract with carriers? Do you get 100% of the PIF, or is it on an insured by insured basis? When a claim happens, they have to ask the insured, "Are you willing to go this route? Do you want to go this route?" Or
Interesting question. I just had this question twice to me yesterday. So here's what I would say. It's whatever the carrier is comfortable doing, right? And whatever kind of change management gymnastics they have to go through. But
yeah,
I think in the early days, it's if a carrier adopted us today, that's the conversation. It's, hey, normally we would send you a paper check. You're going to have your bank on it. I don't know what your bank's going to do. We also have this service called Surety. You can use any contractor you want, but they're going to pay your contractor directly as the work progresses. If you're comfortable using it, I'll send you an email right now with the payment. But over time, I think that conversation switches to, hey, we use this service called Surety. You can work with any contract you want. They're going to get the contract paid fast. If you don't feel comfortable using that, we can send you a paper check. It's going to include your bank, and you're going to have to deal with your bank. Right. So I think it switches over time.
So surely by now the banks are aware of you and what you're doing. Has there been any pushback from them? Nothing. They're probably happy.
And there's plenty of managed repair networks out there that have been doing this for a couple years, right? Alacrity most famously. If you're using the Alacrity network, you can make a direct payment to them free of a lender. They'll go at risk for up to a certain amount. Mm-hmm.
That's my former employer.
Oh, no kidding. Well, yeah.
So Alacrity,
John Michael's brilliance there of saying, hey, we can provide a bigger service.
I didn't know they did that.
They do. I don't know what their limits are. I don't know what their max is, but they'll hold the funds until their contractors finish the job and then pay them or something to that extent. So that's been going on for years, and we couldn't find a single case law or anything around a bank saying, hey, you didn't put me on that payment, so I'm suing you.
So who else is providing this other than you guys and Alacrity? Are there other TPAs, MPAs have taken this on?
A lot of other TPAs and MRPs will take direct payment up to whatever they feel comfortable with their limits are. I don't know what all those numbers are. But I've yet to talk to a TPA that won't do some extent. Like even your AccuServes and stuff, particularly your roofing contractors have figured out a way to do that a long time ago. Because most of your roof claims are $25,000, $30,000 or less. So that level of risk carriers seem to be willing to take for a number of years.
So you're telling me that in that situation, even downstream to the level of a roofing company, they would still have to sign that hold harmless with the carrier. So they have to have
I don't know.
You don't know.
To be honest.
But they're doing it somehow.
Yeah, I mean, carriers themselves are doing it somehow already.
Yeah.
So if you read an HO3, HO5 policy, it actually indicates that loss payees have right of notification down to $1. And there are a few carriers out there that on $1 will put the lender on that payment. But most of them have a threshold of 10K or 20K.
Yeah.
So they're taking their own risk by saying, hey, for $5,000, we're not going to sit here and deal with this. Let's just pay the policyholder. If they run away with $5,000, we'll pay the bank if they come back, right? So everyone's been sort of trying to nip around the edges here, but we've yet to see a payment provider, right? So I think your One Inks of the world that have been really willing to venture into the space. So that's kind of the marriage of what Whatley created here was not only a service for contractors to help make sure they get paid quicker, to take this lender out of the process, but actually create a payment platform designed for property claims versus everyone else that was saying we can take premiums in, but claim disbursements must be just as easy, right? And in property, you have multiple parties on a check. There are many payment providers that can't even handle more than 2 parties on a payment, for example. In the commercial, I talked to a commercial writer yesterday that said, yeah, we have 20 payees sometimes. And think of how many times that check has to get bounced around.
Oh, I know. Paid. Yeah, so we deal with that. I mean, we issue payments out of our system. And that was one of the first things that I learned that I didn't know anything about was figuring out, the payee and the priority in which you had to name all of the insureds and the additional payees. And what do you do when you run out of space in the envelope window and, where do the additional payees go? and how to concatenate and all that kind of stuff. So we learned a little bit about check payments. You mentioned
Mm-hmm.
OnePay a minute ago, and I had a conversation with them the other day, and I actually learned from them that they were not only in the digital claim disbursement area, but they were also on the premium payment side,
Yeah,
which
I
I
think
was
that's
not
how they
aware
started
of.
first.
Yeah,
Yeah,
I think that's what they said. And I was like, I guess I'm just a claims guy. So I looked at it from that aspect and didn't even think about the payment side.
it's one of the few stories I have. I remember when One Inc. was incepted back in like 2011. It was for a startup insurance company that at the time was called like Green something.
Green, it's not Greenpeace. They were my client.
It's not Greenpeace.
No, it's not Greenpeace. Okay,
They were like mop free executives spun off.
I was on the phone with them yesterday. They're Rancho Condito.
Yeah,
Yeah.
something like that.
Yeah, so I was on the phone yesterday on a conference call with their CTO about some API stuff. But yeah, I actually flew out there and met them because we were 100% property
Interesting.
claims
Look at
management
that.
at the time. And they were starting this non-standard
Yeah,
auto carrier in
with
California.
like
And
AAA Michigan's backing or something like that. Right?
yeah. They were
Yeah.
they bought an entity that was licensed in, I think, 14 states.
Green light,
Um,
maybe? Green light? I don't know. It's green something. That's funny that
Now
our
it's
two worlds
bothering
intersected there.
me. Yeah, but and then they changed to PCS, and then they became Aspire.
Exactly. You know the story. How cool is that?
Well,
Yeah.
the CEO was a guy named Chris too. I can't think of his name at the time.
I forget it. I worked with Ray mostly. I can't remember Ray's last name now, but and whoever's
Ge-
still at Aspire, Shanda Burton was
Yeah,
there too.
I know Shanda and Byron Storms. You
Uh-huh.
know Byron?
So I don't know Byron.
Yeah.
But yeah, that's how One Inc. was their billing system. And
hmm
then they were like, well, we got the software company. They're just going to build a
hmm
full policy admin for us.
hmm
And they started taking in premiums. And then at some point, it spun off into just being a payment platform. So yeah, look at that. Our
hmm
two worlds combined.
Yeah,
That was one of my first sales consultant things back in
is
the
that
day.
right? Yeah, no,
Mhm.
it's that company's a cool story.
I sold them the personalized manual. That's,
Awesome.
um,
So Chris, walk me through again, and let's play the role of the user story scenario of I'm John homeowner. I get a claim from whatever, and it's a $50,000 loss, and um, Acme Insurance is my carrier, and Wells Fargo, since we use them, is my mortgage company. So Surety has an agreement with Acme. And if it's optional, Mr. Homeowner, have agreed to the option. So now I have a loss. I file a claim. The adjustment's made and the settlement is agreed to, and we have a payment to be issued. So that payment now, to walk me through that part of it again. Is it all, when it goes through Surety, is it always a digital process, or does it still involve a paper check ever?
uh, the short answer is it's always 100% digital.
Okay.
That being said, we do have what we call a direct payment. So let's say you're making a personal property claim payment, right? $3,000
Yeah.
to replace your couch and your TV, things like that.
Yeah.
You can send just a direct electronic payment out to your policyholder, and then they can select, I want this sent by USPS. But we are only doing the digital transaction. We're then just using an API to issue out a payment through USPS, right? So they can still get a physical check if they want.
Yeah.
But believe it or not, most users want direct deposit. I think it's like 80% of the time it's direct deposit.
Yeah. Why not?
But when it's fund control, so that's direct payment. But if you're trying to remove the lender, if you have a larger settlement on the property and you want to replace the lender, use what we call our fund control payment. So that is 100% digital payments all the time.
And that
The
money
policyholder
goes, that's a payment from the carrier to Surety. And
correct.
you hold
But
it in escrow, and then you
right.
pay it in.
So your policyholder doesn't have to accept any terms. That's kind of the beauty of it. The payment's still being issued to Thomas Brown. Thomas Brown endorses it, as would any other party. So if there's a Mr., Mrs., you have an uncle that owns a little bit of your house, something like that.
Ah,
Everyone else endorses, but Surety becomes the last endorsee. Once
Okay.
we endorse, we make a withdrawal from the carrier's reserve account. We put it in a custodial account. The main difference between us and a bank, because you're probably saying, well, aren't you doing what a bank's doing, is I'm under MSA with that carrier. So I'm still at the direction of the carrier what we do with those funds to a large extent. If they want to pull them back, I send them right back to the carrier, right? But we are providing a service. So the next thing the policyholder has to do is just tell us which contractor they want to work with. If we set a contractor up in our platform, it's a lot easier. They can just push a button and then we know exactly how to ACH payments to that contractor. If they're not in our system yet, they click a add contractor button, type in who they want us, and then we'll call the contractor and explain.
And you don't do any vetting. You never say, no, Mr. Homeowner, you can't use that contractor. They can use anybody they want.
Very basic amount of vetting, which is, are you licensed and insured? And in states where bonding is required, are you bonded?
Got it.
Those are three basic things. If the contractor, if it's my Uncle Joe and he's got a ladder and a hammer, there could be a situation where we say, sorry, we don't trust this contractor to do the job. So we're going to issue a paper check and you can deal with your bank. Right.
Gotcha.
So there's always that 5% fringe case of like, we're not going to solve every single issue out there, but.
And then you guys are actually, you have a platform that allows you to monitor the progression of the project. And you so disperse payments accordingly.
Exactly.
And so do you control that process, or do you have the contractor come in and say, okay, we've done this, here's the photographs or whatever, documentation you need to prove that up, and they ask for a certain amount and you decide, we have enough evidence here to disperse that amount, we're going to release that, but it's ultimately up to you until the job's finished. And you guys like do physical inspections ever, or
not if we could help it. No.
I didn't think so.
So here's the other, I'll give him all the credit for it. The other brilliant thing Watley introduced into the payment space that nobody else had really done is all these contractors have a Matterport camera, or DocuSketch, or just Planer, or Hosta, or some kind of LiDAR thing, or Encircle. Right. So we're just saying, hey, you're already used to using these technologies for estimates. Just use them now to show us that you've done the work. So if I have a Matterport camera, I can go around, I take a scan, uploads into their surety portal, and then our person can see, you got the plumbing roughed in, you got the sheetrock up in half the rooms. I could see the doors were ordered. That looks about halfway done. Here's your next payment.
Got it.
So rather than scheduling somebody to go out there with a clipboard who doesn't really know what property inspection is. They just have their sheet and they check a bunch of boxes and send it back to us.
A bunch of additional money.
Yeah.
Cost.
And so we'll get those scans back, which is carrier data. So now carriers, for the first time ever, have a line of sight into what the actual rebuild looks like. Usually you get the estimate, maybe you get some photos from that, but rarely do you get here's the finished product. So we'll do tranche payments using the scans as substantiating the progress. And then at the end, we do get a work certificate of satisfaction signed between policyholder and contractor.
What's the visibility of the carrier into the progression? They have 100%. You have a portal where the carrier's got to log in. Or do you have APIs that you connect with carrier claim systems? That would be cool.
We do. We do, Tom.
Wow. We got to get some of that.
I know. You really do. So what's kind of neat about Surety is we could be set up as a vendor in a claims management system. So it doesn't have to be a full bore integration where you're recreating all our UIs through your claims management system, right? Through ClickClaims, for example. You can set us up as a vendor. You can transaction the payload, right? The data over to us. And then the carrier can just open our portal and complete the payment from there and monitor the payment from there. But we'll give your claims management system status updates.
So we'll get status updates, and we can use SSO to automate that part of it. And then just like we do with the policy system, when it's time to make a payment, we get the same commands from you guys and pass that on, issue the check. And from there, our process for the monetization of it and the life cycle of the finance side, it's exactly the same.
Precisely. And so because you've already done the hard work of setting up integrations with a general ledger, as much as we can, we try to keep that through the claims management system. But again, I don't need to do 3 months work of integration efforts to make sure that the pay button happens from it can just open up our portal and walk through it. And that's how you get visualization in too. So an adjuster can come in, see exactly what the status is of that rebuild. They can even see the conversation thread that we're having between contractor and policyholder, and they can jump in or stay out of it if they want to.
What's been the geographic area of your most success regarding market penetration, traction?
Look,
And I'm asking, because I'm in Louisiana, and
yeah.
I just listened to.
Here's the funny thing: like, contractors are not they are willing to work with us. I'm sure there's a few out there that maybe would say like, I don't like surety, but there's not many. Like, signing up
Right.
contractors is never the problem. So
Right.
even if we're not in a geographical area, getting into one is not that problematic. So I would flip your question to say, like, what are the kind of carriers that are early adopters here, right? The ones
Yeah.
that are coming on board. And believe it or not, it's largely, either the smaller regional writers or the sort of insurtechs of the world. So I don't mind sharing a CFM we just did a press release on. They do about 60
I
mil
mean,
in
yeah, no,
Missouri.
no surprise there, actually.
Yeah. Because they're very customer focused, right? They want to make sure they're giving their policyholders the best experience, and they're willing to
they're
try
nimble,
something.
and they don't have the bureaucracy.
Yeah, I don't have to go get 40 people's approval and 2,000 adjusters saying, okay, I'll do
And
this.
frankly, they've got more modern systems that are able to work with, APIs and such, as opposed to,
Right.
some of the older core systems that just can't. They can't leverage newer technology because they're kind of stuck in legacy, right?
There's that. It's just change management is always the hardest thing. I mean, you're in a world of trying to replace claims management systems. Man, your job's 5 times harder than mine is. And mine's pretty hard. But, when you're trying to rip and replace a system, you're not just like putting new software on something. You're changing the lives of 1,000 people that have to interact with that software every day. And I don't envy anybody at a VP level at an insurance company that has to make that decision and say, sorry, the thing you know and love, even if you hate it, is going to change tomorrow. And now you got to learn a new way to do something.
I mean, that's, to me, the key to the whole thing is explaining to the actual people that are impacted is this, how it's going to make their job easier.
Yeah.
And I can't imagine that it doesn't.
No, but it's not as easy as you would think, is all I'm saying. And the more people you have, the harder it gets to get
No, I believe me, I feel you.
But right now, and Branch just signed, we'll do a press release with them soon. So Branch Insurance signed up. So because of them, we're expanding pretty quickly as far as the states that we write in. But it's been a lot of Midwest right now. And it's really, I never like to talk about my pipeline publicly. But the next couple carriers that I think are going to come on board here, as they do, well, that's how we're sort of expanding in states.
Gotcha. Well, the reason I asked about Louisiana is A, because I live here, and B, because the insurance industry here is decimated. I actually think it's a lot worse than Florida, which gets all the headlines.
If you know anyone at Louisiana Citizens, let me know, man.
Oh, I do. Yeah, for sure. And I was listening to Newell Norman. He's the local radio host on WWL, and he had the new commissioner of insurance, Tim Temple, on. And look, the guy sounds great. It's frustrating for me to listen to the same roadmap for restoring the insurance market in Louisiana. And it's just, let's go out and make deals with carriers. Let's get a bunch of competition in, get the premium dollars down. And none of them ever really talk about improving the claim process. And I can tell you, it's garbage. It was moderately worse during Katrina, and it ended up costing the state, $120 million in judgments for mishandling claims. And it's still really, really bad. So
what I find fascinating, and I won't call these folks out, not all carriers are like this, but when you're pushing up against something that has been the same since 160 years ago when insurance checks started to get issued the first time, right? It's amazing how reticent people are to just wanting to poke holes in it. Like, I've never sold a product where everyone goes immediately to the fringe cases, says, there's no way, how do you handle this and this and this? And I always have to back up and say, well, how often does that happen at your company? Like, I don't know, 5% of the time. Like, so that's what we're going to focus on? How about the 95% of the time where it can work?
Yeah.
So people are just so reticent to change. Maybe
There's
now more
always,
than
it
ever.
seems to me, this fear of going against the commonly accepted ways of doing things, using the technology that everybody else doesn't talk about. And it's almost like there's this fear that, hey, if something doesn't work out right, then at least I made the safe choice. That's what I find a lot.
The devil, I suppose, right?
Yeah, 100%.
But
Yeah,
this
for
is one of
sure.
those like I've just never seen it be such a. I mean, I'm biased and selfish here in this regard. To me, it seems like what's the worst case scenario? This doesn't work out, you fire us, and you go
Yeah,
back to cutting paper checks. I mean,
yeah.
I'm not spending 3 years integrating a new system in place.
Yeah, I mean, and that is really true. It's the kind of risk reward thing. It's not like they don't lose the backup because they're going with something that, improves the process. If it doesn't work, go back to what you had. It's an easy flip by.
Exactly.
Switch back.
Yeah, I'm not taking away something that you'll never have again. You can always issue paper payments if you want to. So.
So, Chris, tell me about the contractor network side of this, which you've mentioned you have, a very light vetting for contractors that are net new to you guys that are brought in by the homeowners, but you also have a more classically vetted, I presume, a network of contractors that you guys do. You promote that to the homeowner? Do you promote that to the carrier? Or
Interesting.
these lists that your carrier subscribes to a subset of and presents to the homeowner? How does any of that work? Or do you even do any of that? I thought you did.
No, it's a great question. So once a contractor signs up for the system, they submit those documents to us and they give us an ACH. So basically, we're just saying, are you a licensed and insured contractor? And do you have a bank account we can send money into?
Yeah.
I'm going to guess there are some contractors out there that still work in cash. I know when I painted houses in high school, I'm pretty sure that guy didn't have a ACH payment portal, right? He was getting paid in some hard checks, but
I've
that's
been in a
really
few jobs where I've gotten paid in pizza.
there you go. 6 pack of beer and a pizza, right? At a ride home. Um,
True story.
so once they're signed up in our system, the only thing we would do is if a policyholder doesn't know who they want to work with, they're going to get an email that says select the contractor. We're going to draw a 100-mile radius around their address of loss and say, here's all the contractors we're aware of and we've worked with in the past. We do have a little bit of a scoring system in Surety, but it's based purely on how quickly does the contractor work. That's really all we're basing it on. It's not a matter of are they more certified or something like that. It's
Is that is the homeowner involved in the rating of that, or is just that metrics
just
based on
purely
the,
Surety.
yeah, so how
And
fast
and
they
it's
turn in
it's a
their work
minor
product?
impact, right? We might prioritize that over someone else, but we really try to remain unbiased and just
So
say,
these
here are folks we
contractors are
know.
not paying you. There's no monetary exchange to be in your network or any of that.
They do sign up and they do have to sign MSA. And actually, we earn the bulk of our revenue through sharing the proceeds with the contractors. So they are very much our customers, but there's no prioritization based on who's paying us more or anything like that.
Gotcha.
Everyone pays the same amount, no matter size. And
Yeah,
the
it's
only
just
thing we rate the
It's
surety.
just transactional.
Correct. And the only
Yeah.
thing we rate them on is like, are they processing jobs quickly? Right? Did we not get into an issue? So you asked a question before, which I didn't quite answer. It's both. So I think contractor habit over time will eventually be, hey, send the scan. Surety will send us the next payment, right? They'll build that habit of get them the info, we'll get the next payment. But there is also a component of our claims concierge people saying, hey, it's been 2 weeks. Are you ready for your next payment too? So unlike the current state of affairs, which is there's really no one paying attention to how quickly people are getting paid, there's at least somebody there knocking on a door saying, contractor, you ready for your next payment? If so, give me a scan. But eventually, I think that habit will change. Contractors will just start scanning, saying we're ready. And man, there's a play in the future for automating that too. If they send us a scan, we can use that Mpartial technology to compare it against the estimate and say, yeah, that's close enough to halfway and automate a payment out.
Yeah, it's
And
got
then
to
we
be a
can really
really
be more
exciting
hands-off.
time for you guys with the image recognition and the moves you can make based
Yeah.
on things that the machine can do that the human used to have to do.
Yeah. And One of the things I like about Watley and the way he builds companies is he starts from a manual approach. Let's learn first and then chip away at what can be automated best
I love
versus let's
that.
try to automate right from
Yeah.
the get-go, right?
Yeah. I mean, it's smart. I say that all the time. Don't automate it until you understand 100% what you're doing and you
Yeah.
got the process right. Because then you're just going to pile up a bunch of mess. The mess is going to accumulate faster.
Well, man, I'm sorry. I do believe in a future of AI, but there's a certain point, like you want to know there's a human brain behind something at some point in time, right? And especially when you're trying something new, you want to make sure it's not like we wrote the code wrong and sent 100 grand to somebody that we weren't supposed to. Someone's got to be culpable for that, right?
Yeah.
So yeah, so
You
that's
would
how we're
hope.
building it today. But there's a future of automation where they send the scan and within an hour get that next payment, right? Because we can do a kind of quick compare. And we're not creating estimates, so we don't have to get down to the penny. We just need to see that yes, you've made progress from the last scan, right?
Right. Right.
That's all we're trying to
Right.
assess.
Got it. Well, that is a very cool service.
And one day we'll be integrated with click claims for any would-be customers.
How soon is that going to happen?
You t-
I might know a guy.
That's not in my hands, Thomas.
Oh, Lord. Not to bribe some people around here.
Yeah, but how's
You
your
know,
journey been, man? You guys are transitioning from IAs to more carriers, man. How's that been?
well, it actually has been, we started that transition in like 2011.
Hmm.
And it was ahead of the time that the IA started getting decimated by technology displacement and M&A and a bunch of other things. So really good timing. And we still, I mean, we have, I think we signed up to new IA firms, this week or between this week and last week, and have a couple others in the pipeline. So it's not like we don't service IAs anymore, but we have moved upstream and we've imposed certain limits on the size of the IA
Hmm.
just because they tend to be so transitory. Carriers is a much more reliable market, and frankly the pricing is different. So if you think about the model for an IA, they're transactionally based, so they want
Right.
transactional pricing, which makes it super hard for us because it's unpredictable and you can't budget towards it. So that pivot into the carrier world has allowed us to operate as a more financially predictable company, so to speak.
Yeah,
But yeah, I mean,
that's true. Yeah, I've
I
had to build a couple pricing models in past roles, and same with MGAs. Like everyone treats an MGA like they're an insurance carrier. It's like, man, they're lucky to be getting 20% commission on those premiums, so we can't charge them based on the premiums, right?
yeah, pricing is always well. First of all, we look at our pricing every 90 days. And we always learn something
Okay.
from every new customer that we bring on because they've got a slightly nuanced business model themselves. And so we try to value price and, we always want to deliver value to them. And then, you have to have, of course, you have to price yourself so you're profitable. And you never really know until you get into it with one client or another because you never know how much they're going to want to change the software. And so with the
Yeah.
SaaS service, when we promote ourselves as being a boutique software company that will very much get heavily involved operationally with our clients and understand their business and help them understand what they need to do from a technology perspective to fill those gaps and to become more operationally efficient. So we do a ton of customizations. And
Really?
we do a ton. We do a ton.
I mean, I'm surprised and not surprised, but just because you
Well,
guys have
it's
been at property for so long.
it's not normal for a typical SaaS company, which we are, but
Hmm.
we think we fill a unique gap, and that's sort of our I guess our sweet spot is we don't go after the well, we have taken a client from Guidewire. But we don't go after the state farms in the United States. That's just out of our league. And, it would sidetrack and derail the whole company. But, my understanding is 80% of the domestic market is less than 500 PIF, and it might even be less than
Yeah.
100 or something like that. So it's kind of that 80-20 rule. Now that doesn't mean they have 80% of the business. It just means that that's 80% of the logos, right?
Hmm.
So for us, it's a huge addressable market.
Yeah, for sure.
I am excited about moving more into the auto space. I will tell you that,
Really?
the client that we talked about a little while ago is absolutely killing it.
Okay.
Putting up much bigger numbers even than what we're seeing a lot of clients on the property side. And frankly, they love our product and they keep trying to convince us that we should move more into auto, which, we
Same here.
will. We will.
Same here. I'm like, guys, let's just get this one thing right first.
I know it's just that's my greatest challenge is every day waking up, and I think Michael McAlvey wrote the book Fix This Next. It's like you've always got a
Mhm.
million things to fix or a million things that you want to do, and so how do you prioritize those? Which talking about Jillian Cheney, she's a genius. I love her. She's my product manager, been here a couple of years now. She brought in this new methodology for us to evaluate everything that comes in the door, and actually from within our own doors. We obviously have an innovation mindset and we want to improve the software ourselves. So we have to manage what the customers ask us to do and what we want to do internally. And she's built this really cool modeling tool that takes all the attributes from all the stakeholders and puts a factor of X. And we have like a team of 5 people that analyze that, and we put our rating in from a different perspective, whether it's the salespeople or the marketing people based on what they're the people they're talking to and the features they want to have versus what our team thinks we need internally, and so some other factors. But it's really cool to have someone as smart as her, and I'm tooting her horn here because she deserves it.
Yeah.
Yeah, she's really good. That she's able to bring a methodology to a madness that I was dealing with for 20 years. We just kind of willy nilly and.
Most founders I've met are not ones for methodology. They're just ones for madness.
We want to do it all. They took away my easy button about 2 years ago. First, they just took the batteries out of it, and
Yeah.
then they took the whole thing away.
When you can't just tell people what to do, then they do it.
Yeah, I could do that when we were like a 5-person company, but no,
Yeah.
not today. So,
Well, I tell you, man, the industry you're in, if you're selling software to carriers, the most you should invest your space in is success rate, success rate, success rate. I don't care how good or sexy or new your software is. If you can just get a carrier live, get them to be successful, you're going to be fine. You got a business model that you can recreate over and over and over again.
yeah, it's very sticky, and I don't know how much you know about sales finance, but there's a ratio that everybody looks to that's called the CAC to LTV ratio, your customer acquisition cost relative to the lifetime value of your client. And so we tried to calculate ours, and I actually debated the guy that I think created that ratio, and he's like, "No, you're right." He goes, your client, you can't really use that ratio. It doesn't mean anything when your clients have been with you for 15 years. So yeah, it is a great business to be in, and we look at it as long as we serve them well, they're going to stick with us. And
Yeah.
we've never lost in the history of the company, we've never lost a client to a competitor.
Get out of here.
Yeah.
Even client one still with you guys?
No, I didn't say that. I said we never lost them to a competitor.
Got it. Okay.
And what I was talking about earlier with the IAs, there's been so much M&A. So they get 5 IA firms, and maybe 1 or 2 of those is a client of ours, and then they get rolled up into this large entity. They don't want to use us because they look at the money and they want to cut expenses, or they we have our own homegrown system that's going to work great.
That's what's going on a lot with the mutuals, right? All these little county mutuals getting bought up for shared service purposes.
Fortunately, I anticipated a lot of that. I anticipated the technology displacement with, the hovers and the Matterport, and you just weren't going to need the boots on the ground and inspectors in the field to the degree that you traditionally have. So we made that pivot. Not necessarily out of, like I said, not completely out of the IA world, but toward the carriers. And and did really well and got good traction there. And then hit the fan in Florida. And a few of our clients went to FIGA, which FIGA was, and I believe maybe still is, a client of ours. But yeah, there's just, the dynamic nature of the carrier market in the two main states that we focus in, Louisiana and Florida, make it tough. Because
You picked the hard states, that's for sure.
I
mean, where are you going next? Virginia and California?
I picked the hard thing about the hardest things and the hardest places at the hardest times.
That's a good founder, man. Go after the biggest problems first.
And none of it was intentional. It wasn't like I was, a triathlete trying to accomplish something. I just think I'm not that smart. Like nobody else would do it. So he's like, that guy's crazy. He'll do it. I'm like, sure, whatever.
You need a little of that. I don't know if I have that, right? You need a little of that to be a founder. So
you definitely do. You definitely do. You got to have a couple of screws loose.
Yeah.
Well, Chris, I thoroughly enjoyed talking to you today. A very interesting conversation. And
thanks so much, man. I really
had a
appreciate
lot of fun. Yeah, getting to know you a little bit better. I told Jillian yesterday, I said, he just seems like a super cool guy. And you are.
Thank you.
So
all right. I passed the test.
Let's go row together.
Next time I'm in Louisiana, man, we'll do it.
All right. All right, Chris. Anything else you want to say before we wrap up? Are you good?
No, I'm good, man. Just thank you. Thank you for having me on, man.
Yeah,
And
I thoroughly
really
enjoyed
appreciate
it. Talk to you soon, bud.
All right,
Okay.
bud.
Take care.
Take care.